Hi, everybody, and welcome back to yet another cracking installment of the Map Round Show. This is the Built in Texas show, where I'm connecting you to some amazing startups just doing amazing things. Today is no different. This gentleman, his name is Andy Schoonover. I'm saying it like a South African, as I said it would. But Andy, welcome to the show, dude.
Thanks for having me. Appreciate it.
Anytime, man. So Andy, join crowd. Do you say join crowd health or crowd health?
Join Crowd Health.
Join crowd health. Okay, cool. So we all recognize like the healthcare system in the US is, let's just say, it's not as good as it could be. Um,
Challenging.
I was at the doctor this morning, dude. So like this is a very timeless conversation for me. So, but maybe for our viewers and audience around the world, maybe if you could just touch a little bit on your background and a bit about the
Mhm.
origin story, and then we'll kind of take it from there. So off you
Yeah,
go.
sure.
Yeah,
Yeah,
man.
so this is my second shot at healthcare. First one was doing remote patient monitoring. So we were monitoring folks with chronic conditions out of their homes. We were monitoring blood sugars and blood pressure and weight and things like that. So if you have congestive heart failure or COPD or diabetes, we would be monitoring that information and getting involved when some of your stats go crazy. So if your blood sugar is spiked, we would call you and say, hey, what's going on? Are you not taking your meds? Or did you eat something you shouldn't have eaten? Things like that. Sold that company and vowed never to be in healthcare again. um, and little did I know that here I am, sitting and doing healthcare again. But I sold that company, and most of us in the States, get our health insurance to our employer. And so, given that I sold that company, I wasn't working for them anymore. I didn't have insurance, so went to healthcare.gov, got insurance from them, and it was $1,200 for me, my wife, and my two girls. And I joke it worked until I had to use it. My little one was having recurring ear infections. Go to the ear, nose, and throat doctor. She's got a hole in her ear, and she's got a perforated eardrum. And so we go to the local hospital, get that fixed. It was a 15-minute procedure. Got the bill in the mail, and it was $8,000. I was just like, wow, like 8 grand for a 15-minute procedure. I'm like, well, this is what health insurance is for. Like, this is the whole point of us having health insurance. And then we got a note in the mail from our health insurance company saying it was medically unnecessary, and so they weren't going to pay for it. Despite my ear, nose, and throat doc saying she was going to lose her hearing if we didn't get it figured out, my health insurance said it wasn't. They weren't going to pay for it, so I had to stroke an $8,000 check to the local hospital. I was like, man, this sucks. Like, I quit. Like, I'm not paying for health insurance if they're not going to pay for my stuff. And so, I've been uninsured for I think 2 years, 2.5 years, something like that. And it's been great. And through that, develop some tools to allow people to operate outside of health insurance, and that's kind of culminated in crowd health.
hmm So Andy, is this about access to affordable healthcare, or is there more to it than that for you?
Yeah, man, I think there's more to it. I want people to have access to affordable healthcare, but you know what? As I did some research on this, what I found is that 1 out of 5 people that are on these healthcare.gov plans, their claims are denied. So 1 out of 5 claims, about 1 out of 5 claims are denied on these healthcare.gov plans. Like mine, I was the 1 out of the 5, right? And so, and 8 grand is like not a small thing. I've been super fortunate. I did it, but 95% or more of Americans don't have 8 grand sitting in their bank account to pay for, something that's pretty, is not unusual, right? Getting tubes in my daughter's ear is not an unusual thing to happen when kids are little. So I kept doing research, and like 250,000 people go bankrupt every year, even though they have health insurance, as a result of a healthcare, issue. And so I was like, man, like, how do you have human flourishing if you are, at the precipice of going bankrupt if you have a health event? And that's just the way that our insurance system is set up in the United States. And so, it really is trying to figure out, how do we improve this so that people aren't, going into serious distress as a result of health insurance costs. So that is the main motivator for me. Um, so yeah, it's primarily around, cost and things like that. But there's kind of a secondary thing here too. One of the things I found is, um, we have a society in the United States that is, 40% of us are obese. And the other economically developed countries are half that. So we have twice as many obese people per capita. And there's something going on there. And those folks take up twice as much healthcare as the non-obese people. And so, I'm trying to figure out, like, how do we build a system to incentivize people to take really good care of their bodies, which would reduce healthcare costs, but I think also allow them to just live a more full life. And so that's a passion of mine too. So between those two things, those are my primary drivers of starting Crowd Health.
Hmm. So let's get into the main meal of
Yeah.
Join Crowd Health. So just maybe to springboard us into what you guys actually do, I wanted to kind of share some stats. So while you were talking there, from an uninsured perspective, this is like now healthcare and people who are like uninsured, like no coverage whatsoever.
Mhm.
The number of people under the age of 65 uninsured is just under 30 million people. It's a lot of people, man.
Yep.
And then the stats go on. Even private insurance, percent of persons under the age of 65 with private insurance is only 60%. So it seems to me like this is a systemic issue that people are just not prepared for, right? And so even like I was talking about, like I was at the doctor this morning and I said to him, yo, like you're a doctor, you tell me. Like I had to pay like $155 just to get in there. So you tell me what kind of coverage I need, and I could see him putting like CPU cycles into like what he should say, because there are so many options and there's downsides to a lot of them, and so on and so forth. And when I first met you, I was like, I'm so glad I'm meeting you because I've just
Mhm.
arrived here, and I actually think that what you're doing is what my family needs. You know what I'm saying?
Sure.
Because it's like a minefield, and like that story about you, that you mentioned with your daughter and having to cough up like 8 grand. A friend of mine who actually, his name's Marco Bricado, based out funnily enough, in Austin, Texas, of all places. But he told me also, like his daughter apparently sprained an ankle, and they were like, no, 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 it's like they think it's broken, so they went to the doctor. And they had X-rays and things like that, and it was just a bad sprain, and he had to
Hmm.
pay 12 grand, and I think it was like even with coverage, he still had to pay like a ridiculous amount of like
Yeah.
additional
Huge
fees.
deductible.
Yeah, it was like
Yeah.
it was astronomically huge. So this is a major problem. So what have you guys done? Like, how are you solving it?
Yeah, so I think the major issue we have here is that health insurance companies, who are supposed to be our agent, they're the ones that are supposed to be negotiating with hospitals and doctors and things like that to get really low rates, aren't actually negotiating. Like, they actually have an incentive to keep prices high, which is crazy. We have a principal agent problem here, right? Like, there are agents that are actually not incentivized to reduce my cost, and so that's the problem. And so I kind of joke with people, right? Like, um, the buyers of healthcare, which is these health plans, and the sellers of healthcare, which these hospital systems, both want the price to be high, and therefore it doesn't take a PhD in economics. The prices will be high, and so people may be like, wait, hold on a second. Like, why do health insurance companies want these prices to be high? Well, they're maxed out at the amount of profit they can take at 15% of premium. So if my family, just to use easy math, has $1,000 of premiums, they're maxed out at $150 worth of profit. So how do they make $165 of profit? They have to increase my premiums from 1,000 to 1,100, right? And so they're actually incentivized for me to be sicker, right? To have premiums go up, to have claims go up. And so they can charge more. And so that there's this just crazy incentive system, perverse incentive system within American healthcare, that the kind of the agents of ours are actually incentivized to work against us. not only that, the largest owner of doctors in the United States is United Health Group, the largest insurance company. So the insurance company who's supposed to be negotiating for us with the doctors actually own the doctors. So how does that work, right? There are some serious conflicts of interest there that, again, it just, there's so many things within this system that actually, escalate the prices that, for us, we say, look, like we should be negotiating for ourselves as individuals and introduce consumerism into healthcare as opposed to these big companies negotiating for us. And so that's how we bring down costs. Is if you went to the doctor today and said, hey, I'm going to pay in cash, you will get probably a 30% minimum better price than what the health insurance plans are paying. And so why is that? Right? Because that doctor is getting cash at the point of care. If they have to bill the insurance company, one, they're not going to get it. They're not going to get their money for 60 or 90 days. Two, they have a billing staff in the back that has to, actually bill the insurance companies. Three, they have to run it through a system that takes 6 or 8% off the top. Their billing system takes 6 or 8% off the top just to bill it. Three, or what am I at now? Four, whatever, is the oftentimes the doctor actually has to get approval from the insurance company to do the procedure that they think needs to be done. So we have, 4 things there going on that is keeping them from operating efficiently. And, from the stats that I've heard, is about 30% of the doctor's time is dealing with, admin and insurance, right? And so we have this just huge admin structure that, we spend about $4 trillion in the United States. 30% of that is, $1.2 trillion on administration costs alone in this country. So if I can go in and I say, I'm going to pay cash with my debit card at a 1.5% fee, would you prefer that or something that takes all of this effort, all of this time? And the doctors, 99 times out of 100 is like, give me the debit card, right? Even though they're going to get paid less for it.
Mm-hmm. So crazy stat. Because I'm like, you're talking, I'm like, how big is this opportunity actually? So the health insurance market, according to God, aka Google, was was around $2.1 trillion last year, and it's estimated to hit approximately, and this is just in the US, $3.6 trillion by 2028. That's a staggering number.
Yeah, and that's non-governmental. That's non-governmental numbers. And so if you add the government on top of it, it's another $1.5 trillion to $2 trillion.
So is that the market opportunity for you, would you say?
Yeah, I mean, I think your stats were great in the beginning. Like we have 30 million people who are uninsured. I think it's another 100 million people who are under or 150 million, something like that, under commercial plans that they get through their work. And then you've got another 15 million people who are getting healthcare.gov plans. So the way that we look at this and we say, okay, 30 million uninsured, for sure, people who might, be interested in us. We think these healthcare.gov plans are crap. And so there's another 15 million, because these are high deductible, high premium type of things. And then what we want to do is we want to build a direct-to-consumer experience where we can peel off 5 or 10, maybe even 20% of the people who are getting health insurance through their work and saying, man, health insurance stinks. Like, I don't want it through my work. I want to get it through a true like direct-to-consumer experience that's really, really great. And so if I can get 10% of those, I mean, I'm up to 75 million people potentially in as my target market. So, it's 25% of the population or something like that. And if it goes really well, I think it can go higher than that. But that's way big enough for us to make a substantial impact on the U.S. healthcare system and a substantial company. So those are the numbers that we're looking at.
Exciting, right? Especially if you can figure out like a platform to do it. If only you could build something and give someone an alternative. I'm being facetious here, if you haven't noticed, because you've actually done this. So like, how does it actually work then? Like, what is Crowd Health? Let's land that first. Yeah.
Yeah. So, typically what happens when you have health insurance, right, is you write your premium check and send it to the insurance company and it disappears. And we do it differently. So what happens is when you sign up with Crowd Health, we have an account for you. We call it your crowdfunding account. You put money into that account every month. If you're under 55, it's $175. So $175 goes into that account. Crowd Health takes $30 of that, so 145 is left in that account. And every month, 145 will be added to that account, right? And then if somebody in the community has a health event, then we will come to you and say, "Hey, Matt, you have $1,000 in your account. Andy's daughter broke her arm and it's $5,000. Andy's going to pay the first $500 of that. We want to get the remaining 4,500 from the community. So will you be one of that, let's just say 45 people, to give $100 to Andy to help him with his daughter's broken arm?" And if you say yes, then $100 will come out of your account. So your account will go from $1,000 to $900, and it'll be transferred to Andy's account. And then we'll do that until Andy has that $4,500 plus his $500 to pay for his daughter's broken arm. It's voluntary. You can say yes or you can say no. And so then the question is like, okay, so why would I say yes to Andy's broken arm, right? Or Andy's daughter's broken arm? It's not like, childhood leukemia or something that like tugs at your heartstrings. Well, when I submit my my health event to the community, you also see my history of giving. So has Andy's family said yes to everybody else's health events, or has he said no to everybody else's health events? So in essence, it's almost a reputation score that shows what, if I'm a good member of the community or not. And if I said yes to everybody's health events, and you're like, oh, he's been a good member of the community, I'm going to help out Andy, right? If he said no to everybody's health events, I've been a crappy member of the community. And so you're probably going to say no to me, right? And so there's this kind of this reciprocity engine that drives the drives this, to make it successful. And so far, I think we're up to like 1,200 bills or something like that have come from good members of the community, and every one of those have gotten funded. So it seems to be working, really, really well. And that's everything from a $59 pediatrician visit to, hundreds of thousands of dollars for, brain hemorrhage. We've got, a number of cancer cases right now that are hundreds of thousands of dollars. And so we can do the small ones and the big ones. And it seems to be, equally probable that these will get funded.
Mm. Well, it's fascinating, right? It's truly novel. But I do think that there's some things, even if they're novel, that are like 100% true. One of those things is reciprocity, or this idea of like givers gain. So like even if you take this show, for instance, like I know I built reciprocity with you, right? Because I've given you something, like a platform of exposure. I know it's true because irrespective of like, I don't do it to get anything back. I do it because to generate like help, right? And contribution and things like that. And this is like the idea of like, I'm benefiting the most by doing the shows. Makes sense. And I do like 50, 60 shows a month. That's a lot of time to be giving to the world, but maybe just to unpack the novelty side of it. Like I've been while you've been talking, Andy, I've been sharing some of the social proof from your website. I'll bring it up again. It's like there's a shit ton of like people who are like, oh my god, this is really novel and amazing, and like help, like great proof. What have you found difficult about getting adoption at scale, like the way that you have? You know what I mean? Like, because it's like Crowd Health. Like what? I must give to get, like, you know what I mean? Like it's it's the opposite, isn't it? It's like I'm giving my money usually away, hoping to get something back. You know what I mean? Like it's a fundamental different approach, or fundamentally different approach.
Yeah. And that's the challenge, right? It's like your health. And so, ultimately people are most concerned about, if something big happens, will somebody help me? And I think, part of this is just understanding that we've kind of been like programmed to think that health insurance companies will definitely step up if, you have something big happening. And I'm trying to explain to people like, that's not actually the case. Like they promise that they're going to get, they're going to pay your bills, but oftentimes they don't. And in fact, almost 20% of the time, this is the Kaiser Family Foundation came up with this stat, almost 20% of the time, they don't actually pay the bill, right? And so that leaves families in a tough position. And so regulatory can say they promise, but they don't. We regulatory say we can't promise. We're not taking on the risk. The risk is still yours. But most of almost all the time now we've gotten the bill paid, small and big. And so it's really kind of getting people to understand that health insurance is not the only way. And so, if you think about it, right, like our early adopters here are people who are like fed up with health insurance, want something different, want to be a part of a mission to change the way that we do healthcare. And so, we get a lot of single folks, a lot of, people in their late 20s and their 30s. And our average customer is like 35 or 36 or something like that. And so they tend to be younger. And so it's been, kind of an interesting journey to try to reprogram people to think that you can pay for your healthcare in a little bit of a different way.
So I was on your website looking at how much this all costs, and I see you've got like different pricing. This is where it'll be clear where I'm going with this in a moment. But
sure,
it's kind of like age 0 to 5, 225, and then it kind of goes up to like families for $695 a month. Just from a commercial perspective, like how do you model something like that? I'm fascinated to unpack that with you. Like I've done loads of commercial models and things like this, so I'm very passionate about it. Like how do you model? What have you learned about effective modeling for something like this that is novel, that is crowd health, that is truly new, it's in a wide space in and of itself, to make sure that you're able to provide a continuity of service, right? Because the worst thing that could ever happen is like, yo, like I'm in shit and I need help and I don't get it,
Sure. Yeah. Like many startups who are doing things that are like totally different than the way they currently have been done is nearly impossible to model. And so candidly, we looked at there's some other things out there that are kind of similar. There's these sharing companies out there that are kind of similar to the way that we work. At least they have some kind of similarities. They're not totally mechanically the same, but so we looked at those, and then we just said, hey, this is our best guess. And so we've been doing this now since April of last year. What we found is that we're right at about 30% of the money that you put in has been used for crowdfunding, which means that 70 cents on every dollar that you put in is still sitting in that account. So we have not, asked people for very much of what they put in, because we are getting about 52% reductions in costs as a result of negotiating these bills as individuals, as opposed to a health plan. So we have an outsourced provider that's helping us negotiate these things, and we're getting 52% discounts versus what the health plan would pay. And so it's like, how do you model that? Like you can't really. But we've guessed right, and in fact we're reducing costs next year as opposed to increasing costs, because we feel really, really good about the fact that people are actually utilizing us to help them bring down these costs. So candidly, it was a bit of a swag, and thank God it worked out, but that's just kind of startup world, and we thought we were being pretty conservative on it, and we were, and so we're going to actually reduce costs next year.
Yeah, you miss 100% of the chances you don't take. All right, awesome stuff, man. So listen, have you read a book called Crossing the Chasm?
Yeah, sure. Yeah.
Okay. So Jeffrey was on my show, and he talks about this idea of like, finding a niche or an audience that's small enough to lead, but big enough to matter. And I'm curious to unpack that for our audience. Like, what has been your approach to getting that early, like to crossing the chasm? Like, is it families? Is it, like have you decided on like who is your audience that's small enough to lead but big enough to matter, or was it kind of like just a word of mouth thing that got you to grow? Oh, you did? Okay, go.
Yeah, absolutely. I mean, I love Crossing Chasm, and there's another one that came out called it's about network effects from a VC in Silicon Valley, the cold start problem. And both talk about, yeah, like finding this niche. And, so what we did last year was I went on something like 60 different podcasts, and they were everything from, the left of the left politically to the right of the right politically. And then I got like a golf podcast and a mommy and me podcast and um I'm trying to think of other ones that I was on. Oh, a lawn mowing service podcast, like all these podcasts, right? And I'm like, okay, so which one's going to resonate? And so what we found is the ones that resonated with libertarians, the Bitcoiners, libertarians, Bitcoiners, like those folks, like love the fact that they can relieve themselves, remove themselves under kind of having to submit to a health insurance company to take care of their own health. Like Crowd Health says, no, it's between you and your doctor. We don't want to get in between you and your doctor. The government shouldn't get in between you and your government, between you and your doctor. And so that totally resonates with that crowd. I tend to lean more of a libertarian. I'm a Bitcoiner myself. And so that was, maybe it's my enthusiasm for that, group of people, but those are our people right now. They tend to lean male, they tend to lean single, and those people tend to be less risk averse and so are willing to try something different. So, and that is a big group of people, big enough of a group of people to get my initial, group set up. So we've got thousands of those people who have signed up over the last, 18 months. And it's a great group for us. And there's a number of other characteristics around those people that make them especially good as kind of our core initial group.
Mm-hmm. So I'm very curious about that because it is novel, isn't it? It's weird, novel again.
Sure.
maybe
I should have called it
insightful.
novel health, not crowd health.
Yeah,
novel health.
exactly. And then I came across this article on your site called Bitcoin Fixes Healthcare, and it's about the reintroduction of free market economics into healthcare. I'd love for you just to spend a minute or two on this one, given the fact that we've now identified that there's this Bitcoin community, if you like, this libertarian mindset that you're using to actually cross the chasm. So what do you mean by reintroducing free market economics into healthcare? Unpack that for us.
Yeah. So, if you kind of think about healthcare right now, there is nothing free market about it. There is an insurance company and these big hospital systems. The insurance company, the vast majority of people are in one of 5 insurance companies. In any city, there are kind of generally 2 or 3 hospital systems. And so you have these, somewhat monopolistic insurance companies trying to negotiate with duopolistic or sometimes monopolistic health systems, and there is no negotiating that's happening there. And in fact, the health insurance plan, as mentioned earlier, has really no incentive to negotiate the prices down, so the prices just go up. So there is not a free market that's happening within healthcare right now. And so I tell people, and I truly believe that this is a true statement, I have more negotiating power as an individual than United Healthcare does with my local hospital systems. And this is what I mean. If I have a huge event, let's just say, I get cancer, right? And it's $1 million claim. It's $1 million health event. United Healthcare has to pay that $1 million. Like that is the price in contract that they have to pay. The hospital system actually has a decision with me. They can charge me $1 million or they can negotiate with me, right? And so I'm actually going to negotiate with my local hospital, and I'm going to be able to negotiate that $1 million down to $300,000 because their only other option is to put me into bankruptcy. And actually we have we have law in the United States that says if you don't agree upon what the price is going to be before the service is rendered, you have to negotiate in good faith afterwards. Right. So the hospital system has to negotiate with me, whereas they don't really have to negotiate within United Healthcare. Right. So I have way more power to negotiate these prices. And that's why we're getting prices down by, 52% versus what the health plans pay. That is showing us that we can negotiate this better than health plans. And so we're introducing free market economics back into the healthcare system. There's a second component of that I think is important for this Bitcoin piece, right? One of the problems that we have is that these health insurance plans are holding, big piles of cash in bank accounts, which just sit there, right? Any interest off of those goes to the health insurance plan, not to the end user of that service, right? So the health insurance plan gets 100% of that. So it's a super inefficient way to hold capital. And so what we're saying is like, look, you can hold capital in your own account and you can invest it in whatever way you want, and you get the benefit of that, as opposed to the health insurance company gets the benefit of that. So you can even hold it in Bitcoin if you want to, which I truly believe as a Bitcoiner is anti-inflationary. Whereas this big pool of capital is melting because, as we are seeing inflation be, what was it, 8.2% or 8.3% or something like that last month, is actually, melting. So they actually have to raise the price to offset the reduction in the value of the dollars being held in that account. So we're using, just capitalistic economics to actually improve the value to, our members. So kind of two components of that. One is you get the value of the increase in the value of your account, and you are able to negotiate better with these big hospital systems than United Healthcare or Cigna or Aetna or whoever.
Mm-hmm. Amazing, man. That's really cool. So listen, what's the vision for this company? I mean, what is the ultimate difference that you hope to make to, Americans initially, but I mean, you can obviously scale this anyway. So what is the ultimate contribution that you hope to make?
Yeah, I mean, I think that, my goal is not to save money for a few people. I mean, my goal ultimately here is to force hospital systems ultimately to change their cost structures so that we can have a significant reduction of healthcare costs in the United States. And the only way we're going to be able to do that is, through the free market economics that we've just talked about. Hospitals, from my perspective, are some of the worst run organizations on the planet. They are so overburdened with admin and healthcare costs, or admin primarily costs. And so if we can rip the admin costs out of the hospital system, we'll actually be able to get our bills down 30, 40, 50% probably. And so that's what I really truly want to do is rip all those admin costs out, create some efficiencies so that we can actually reduce our healthcare spend by 30, 40, or 50%, as opposed to seeing healthcare go up 26% next year. And I think that's a reasonable thing to do. All these health insurance plans are doing this because they have contracts literally with like millions of lines of code for every different doctor and every hospital system throughout the country. And so they have to have this big, huge administrative burden to be able to deal with that and to keep, fraud from coming into, the system and things like that. Yet, or like, let us do this as individuals paying for healthcare. I want to be the one that determines whether or not the care that I'm giving is a fraudulent care or not. So I think what's ripping out that admin cost is going to save us a ton of money, and it's going to force hospitals to rethink their cost structure. Just real quick, the average baby in the United States costs $14,000. So William and Kate and their last baby, we all know, Prince William, right? And had their baby at the Ritz-Carlton of hospitals in the middle of London, and it was $9,000. Like, this is London, right? This is one of the most expensive cities on the planet. And they were able to have their baby at the best hospital in one of the most expensive cities in the planet for $9,000. Yet the average cost of a baby in the United States is $14,000, right? That doesn't make any sense. It's not that these hospitals can't do it. It's just the system is set up so that it's so expensive to do it that our prices are twice as high as any other country, basically.
So it's ridiculous, dude. Like, there's something systemically wrong with that. So I'm glad I'm glad you're doing something about it. I want to change gears quickly and maybe share some founder stories. And you were talking to me about the movie Facebook and Eduardo. He goes to his dad to get money, etc. You guys have obviously raised money. Um, what have you learnt about raising money in the market the way that it is that you feel like other founders could benefit from?
Sure. Um, Man, this is a hard one because I raised money. My first time I raised money, it was in either the midst of maybe one of the most, one of the craziest times in the history of our country to raise money. I mean, just people were throwing cash at anything and everything, right? And that was my first round. My second round was like 2 months ago, which is we're in the middle of an inflationary environment. The stock market is way down. Everybody's tightening up. So it was much more difficult the second time around, even though the company has shown tons and tons of progress. And so I think people look at some of these entrepreneurs who are able to raise money in awe, right? That they're able to raise so much money, but they were able to raise money in an environment that everybody was able to raise money. Like it's not that impressive. Um, if somebody goes out now and raises money for a new idea, that's impressive. That's impressive. So let me just start there. I think the other thing that I've learned too is, and this is a generalization, and so people in the middle of the country, they can yell at me if they want to, but like this is just a generalization. Um, People in the middle, the VCs in the middle of the country, and even on the East Coast to some extent, um, like to invest in things that are iterative, meaning um, they're incrementally better than the previous thing, right? Like they want to see something successful and they want to iterate on that, and so it's kind of incrementally better. And I want to invest in that incrementally better. What I've seen is the folks on the West Coast generally are willing to take bigger swings, bigger swings at wilder ideas, and that's what I've kind of just seen, right? And so you look out at Silicon Valley, and you're like, oh my gosh, like all these massive companies have been able to get built out of Silicon Valley. I don't think it's the talent. I don't think it's anything like. I think it's VCs in Silicon Valley are willing to take bigger swings. Generally, that's a generalization. Just something that I've seen, um, and in healthcare it's almost even more so because everybody is afraid of healthcare, like all the regulatory issues and things like that. Healthcare is a hard thing to raise, money around because nobody feels like they fully understand it. So those are just some of the things that I've learned. I mean, it's definitely helped. Like my last company, I started as CEO when it was like 20 or 30 people, something like that, and we ended and it was like 300 people. So that was over 6 years, and so I saw the massive growth, and people saw that I could do it, and so it's much easier as kind of a second time, CEO to be able to do something like this than a first time CEO. So I benefited from that, and I may not have been able to raise it if this was my first time around, especially for an idea that's so crazy and so kind of inevitably kind of gonna, we got to run through some barriers, right, to make it work.
Yeah. Well, I think I've had this being shared with me before. Like I've had on the Built in California series, I was talking to a number of founders there, Frank Gabrielano, Billy Brash, and I said to them, like to your point around the West Coast, like I said, like how much of a role has the Valley actually played in your success? And they were like, it's immeasurable.
Yeah.
Because to your
In
point,
the ecosystem.
yeah, dude, but it's almost like, but if you go to a VC and you go, yo, man, I can walk on water, I need $1 million, he'll probably believe you. Do you know what I
Yeah.
mean? Like, cool, that sounds like an interesting, we could all walk on water, it'd be great. You're more likely to be believed, even if the idea is crazy. And I think that's a really interesting, insight, isn't it, around the
Mm-hmm.
role of the environment. And I'm curious to maybe get your view, being based in Texas, and obviously there's a lot of like it's the new Silicon Valley,
Sure.
Austin, and so on and so forth. Um, is that true? And how much of a role has the environment, the ecosystem of Austin played in, or Texas even played in your success?
Yeah, I mean, I think that my lead investor is here in Austin. They invest in lots of Austin companies. It's called Next Coast Ventures. And per the name, right? Like they're like, hey, we want to be the next coast. Austin and Texas generally is going to be the next coast. And so I think it's helped, but I can't say it's we couldn't have done it in St. Louis, Missouri. Like, I think almost all my people are remote. There's only two of us that show up in the office every day. We got people in Georgia and Virginia and Indiana and all over the place. And so I think kind of the remote nature of the way that we work now post pandemic is, you know, breaks down that ecosystem a little bit. And so I don't think it was that super important. I think we'd probably have the same number of customers today if I lived in St. Louis or Des Moines or Kansas City or whatever that we had here in Austin. Now, would I've been able to raise the money without being in Austin? That may have been a little bit harder. One of my like I said, my lead investors in Austin. My second lead investor, we had kind of co-leads, is in New York. So, I probably still would have gotten that one, but it probably would have been a little bit harder to raise money in one of those kind of secondary or tertiary cities. But other than that, I don't see the ecosystem of Austin being all that valuable, just given kind of the remote nature of how we work nowadays.
It stands to reason, doesn't it? Because if you think about like, people, a lot of CEOs struggling with talent, right? So like distributed teams, how do you scale culture, things like this? How do you attract talent? Because now the pandemic has obviously made this reality, which is, like I can hire anyone from anywhere. You know what I mean? Like, and I think it's more adopted as an idea,
Mm-hmm.
as a premise, isn't it? And so you would imagine that it doesn't really matter where you are. You could be in South Africa, for instance, as long as you have a great, product and you have a
Sure.
great story and you have all those fundamentals in place and you have a network. Then why wouldn't you be? Or why couldn't you be successful? Do you know what I mean? I know it's
Mm-hmm.
harder. Like I know there's a lot of people like, no, like it's you. And I would also say, like, if you're in another continent trying to scale in America, it's very, very, very hard. Like you be here, like don't be there trying to do it here. Like it's a
Yeah.
very difficult thing to do.
Yeah.
Uh,
No, I agree with that. I agree with that. I mean, if you were in South Africa, I love South Africa, by the way. Had my honeymoon there.
oh, awesome.
I don't think I'd be able to do this from South Africa. Well, I mean, one is just like the time difference is, sucks. It just makes everything
Mm-hmm.
harder. you know, what is it in South Africa right now? Like middle of the night sometime, right? Like,
Mm,
or late evening or something. And so it'd just be hard to make this work from South Africa. But I think anywhere in the United States, it doesn't really matter where you
mm.
are. I mean, I've heard people running companies from even like Mexico and Colombia and places like that, but you're still in the same time zone, so it doesn't really matter. Um, so
And
the
I think
the beauty of remote work.
yeah, and I think that's a really important point, right? Like you must, I think if you're going to scale in America, like I think in America, it's like it's
America.
an America. It's like it's such a huge market for something like what you're doing. It's like you don't really need to go anywhere else. You know what I mean?
Yeah,
Like there's
totally.
for how many million? 300 million, 350
Yeah,
million, something like
350 or
that.
something like that.
I mean, it's ridiculous. And they all need, I mean, to be quite honest, like that number of like 2.1 trillion just private sector health insurance, like that's I mean, if you put that into like Africa and then you did the exchange on that,
Mm-hmm.
like people's minds can't even do the math. It's so beyond comprehension, like the size of it. Do you
Yeah.
know what I mean? Like, even in the startup space, there's 99 startups, legit. This is the last data I heard. 99 startups in Africa, the whole of Africa. So landmass is bigger than the US, but in the whole of Africa, right? The entire startup ecosystem, 99 startups have raised $1 million or more in the last 12 months. In the US, there's over 12,500.
Wow. That's a cool stat.
It is, right? Like I know there's probably like two VC firms in the whole of Africa that are actually any good. Do you know what I mean? Like
Yeah.
it's so small. But I would, this is what I'm saying. So like if you're a South African, let's just say you're in Israel, like you got to have a team here. Like I spoke to Lucia, they're like a data intelligence company. Like they're coming after Zoom Info and stuff, but built in Israel, scaled rather Asia Pac, Europe,
Mm-hmm.
Africa. And now they're like, yo, we got money behind us. We want to come after the big money. Like, and guess where they're coming? America.
America. Look, I mean, look, I hear you on that. I mean, I know this is not the topic of our conversation, but about 30% of my assets are actually investing in companies in Africa, because I do think there is such opportunity over there, and I have a heart for for that continent. So I have, a significant chunk of my assets going into really cool, I think really cool companies over there that are doing some really neat things and innovating. And the requirement for a return is higher, because there's just way more unknown. And so, I like that. You help humanity while also investing in a for-profit organization. Like, those are the things I can get fired up about.
I know, right? But I think if you change the context, you change the whole conversation. I'm actually
Totally.
I'm very interested. I wouldn't even say it, like, surprised that you've got that amount of cash sitting into African startups. I agree, like, the opportunities there, like, there's probably, like, I suppose if you created a truly novel marketplace for insurance, like maybe what Naked Insurance has done, then great. Absolutely, you can scale and so on and so forth. But typically, because Africa, like South Africa, there's 45 million people, say 51 for 45, 50 million people. And there's a story about SnapScan. So, by the way, mobile payments in Africa way more advanced than America. Like, no doubt. Trust me, I know. Like, I've been in both ecosystems. Like, Africa's way more advanced because we're forced to innovate in that space because there's such an informal market that's not banked, like, whatsoever. Like, the informal trade sector in Africa is a great book you should read. Everyone should read. It's called Cassonomic Revolution. And the Cassonomics is basically the informal trade sector, meaning it's the money that flows between people through the exchange of goods and services in an informal manner, meaning it's not tracked anywhere, it's not banked anywhere, it's handed with cash, or it's put into stock files, or it's staved under mattresses and things like that. Like, the size of the Cassonomic industry dwarfs, like, it's not even compared. It's like the US versus Africa in terms of insurance. It's the same idea, because in Africa, people don't trust the banks. You know what I mean? That's what opportunity. But if you could tap that up, like, imagine the opportunity. So the startups in South Africa and in Africa generally, once they've got some kind of product market fit, they go to a corporate to get access to millions of customers overnight. So their scale thing is not be direct to consumer. It's usually B2B. So, but like, startup to the corporate, Standard Bank as an example, and then and then you get 10 million customers overnight. Like that.
Yeah.
That's what happens.
One of my bigger investments is a company called Paga, which is in Nigeria, which is kind of the Square of Nigeria. And the funny thing about that is I wired this guy money, which is a good chunk of money. And, I'm wiring money to Nigeria, right? Which is not the easiest thing to do. It literally disappeared for like 4 days. And I was like, wow, I just probably, sent this to a Nigerian prince or something, like, that we all get those emails every day. I'm like, wow, I've totally lost a ton of money on this, but thank God he got the money and he's doing awesome, just totally crushing it. So, and I knew that guy through business school. He went to Stanford with me, so there was a relationship there. But I have a heart for folks over there, and I love that continent. There's something about Africa that just draws me in.
Well, I'm glad you're doing the leap, man, because we need more forward-thinking people such as yourself helping. Like, even just angels, because there is, like, it's interesting, right? Like, I say that there's 99 startups, but actually, if you compare the growth, it's like, especially in the financial service space, e-commerce. There was, and a lot, and weird, like, it's Nigeria. Like, there's so much innovation, funnily enough, happening in Nigeria with e-commerce platforms and payment platforms and things like this, that they're starting to get picked up by PE firms sitting in the US.
Yeah. Yep. Totally. Well, and the interesting thing about Africa too is health insurance, health care is, way beyond, or way kind of way behind what we're doing here in the United States. And there's actually something very similar to what Crowd Health is doing, but they've been doing it for decades now in Kenya. So there's very much a community aspect of taking care of other people's healthcare by community members pitching in, dollars, or not dollars, whatever the equivalent is, into, helping individuals in their community. And so it very much is similar to the way that we're doing things. We're just putting a technology platform on top of it and making it a little more efficient. So I met some guy at the conference, actually, interestingly, the Bitcoin conference, and last year in Miami. And he's like, "Oh yeah, they're doing something very, very similar in Kenya. They just don't have the technology platform on top of it." And so I was like, "Great, that means it works. If it works in Kenya, we can get it to work here."
Yeah, exactly. If you can get it to work in Africa, you can get it to work
There you
anywhere.
go.
Oh, that's classic, man. So look, just a couple questions and we'll wrap up,
Sure.
Andy. So
Yeah.
if I just want to have a bit of fun with you, so I'm going to give you the keys to the Matt Brown Show time machine. I'd love for you to go back to like day one when you were like, "Hey, I want to give the bird to traditional insurance, and I want to really make a difference." So if you could go back to yourself and sit across from yourself day one, what advice would you give yourself now that you've learned so much and overcome so much about building this startup?
Yeah, so my last company, as I mentioned, I joined as CEO and we had a couple dozen people, and the infrastructure was kind of built, the product was kind of built, but and with a startup, it's very different. Like, you have to start from literally zero. Like, you don't even have a bank account. Like, you have to go to the bank and get a bank account. And so I underestimated the similarities between an existing company and a brand new company, just because the existing company was so small. I thought that there'd be tons of similarities, and the people required to get that company from, 0 to $10 million, is just different with a startup than it is with an existing company. And so one of the things that I learned, and I think, any of the entrepreneurs out there, hopefully this will resonate with them, is, you know, the people in a startup are more like, special forces. They're more like Navy SEALs. They go in, they get stuff done, they fire away, and they're going to miss sometimes, but they're going to, iterate and deviate from, what they thought was going to work. And so, like, it's a special forces team that are going in and getting stuff done, right? So I need special forces. And what I did is I hired a bunch of generals, you know, people who were like good up here and would be good at delegating down to a group of people, but weren't the actual ones like on the ground firing away at the enemy, right? And what you need in a startup is people who are firing away at the enemy. And so that was one of my biggest learnings, is I was hiring people from really big companies who were super successful, but weren't the doers of those companies, because there's a lot of other doers in big companies. And so what I found is I need people from entrepreneurial startups who are the doers and get stuff done. That's my biggest learning, over the last year and a half. What's doing a startup is the people that you need. It's not a horsepower thing. It's not an intelligence thing. It's a personality and just a skill set thing. You need the Navy SEALs as opposed to the generals in a startup.
I love that. I just tweeted that. So, look, let's wrap this up, Andy. Why do you do what you do? I mean, you could solve any problems, it seems. Why this one? What gets you out of bed in the morning?
Yeah, my wife asks me that sometimes too. Because the first time, I say this humbly, the first company went just incredibly well. We sold that company for 9 digits. It went awesome. I don't have to do this. I want to do this because I truly want to make an impact. I mean, it's the impact for me. It's not the dollars. I mean, I joked with my investors. I was like, look, I want to make you guys a lot of money. If I make a lot of money, I'm going to go buy a new fishing rod. Like, that's what I really want, is just a new fishing rod. Like, that's the extent of it. So it's not a dollars thing. It's not a number of zeros in the bank account, because that just doesn't motivate me. It's like, I want zero people to go bankrupt due to healthcare events next year, right? Not 250,000 families. That's what breaks me. I want our obesity rates to go from 40% back down to 15% like they were 4 or 5 decades ago. And try to motivate people to do that, because I want the human flourishing that comes with, having a body that's, physically fit and, way more able to take care of your kids and your grandkids and go on great vacations to Cape Town and stuff like that, right? And I think through Crowd Health we can accomplish those things. So that to me is why I'm doing this. It's not for the zeros. It's for the reduction of the number of zeros, people have to spend on healthcare.
Yeah, exactly. It's the 0 to 1, right?
Yeah.
Or in
Yeah,
your case,
for sure.
in your case, 1 to 0.
Yeah. Yeah, for sure.
But Andy, it's been a real privilege having you here, man, and shooting the breeze with you. Yeah, man, I think what you're doing is novel, as we touched on, and it's so needed. And I think if you are able to get any kind of scale whatsoever, like you're not only going to make a great difference, but you're going to be, a far more wealthier individual, not only personally but also materially too. So, wishing you all the best for the future, mate.
Thanks, man. Appreciate it.
Cheers, guys.
Have
Bye
a good
now.
one.